Rohr here with a somewhat concise early highlight on Thursday, May 21st, 2015. It's currently 6:45 a.m. U.S. Central Time, and we have just seen the ECB minutes of their meeting, which were pretty constructive, but there's also so much else in the data, including the previous dovish minutes of the Bank of England and the FOMC. So, what does all this mean to the markets? Well, it means an S&P 500 future where we've got typically the short-term view on the left, on the short-term view with the hourly chart on the left, 30-minute on the right. That is currently trading off $2.50 on the day, right at 21.20. So against the old all-time high, and even though it had a low back at 21.16 today, actually the overrun downside reversal we keep pointing out was from back at the all-time high at 21.19 that basically left a downside reversal back on Monday, April 27th, which the market found challenging for the following several weeks until late last week when it pushed above it. But truth to tell, such a breakout from a several week range hasn't brought much follow through so far. Here's your positive response to the FOMC minutes remaining accommodative, but that fizzled after setting yet another new high up at the 21.32 level, and the market's kind of slipping back below a key area around 21.25. There was a down break there, nominal, drifting out through the channel in front of the FOMC minutes, but as we noted, you can't ever really trust nominal sideways drift breakouts, and certainly that proved to be the case here. They immediately shoved up through that into a new high, but now fizzled back below that 21.25 and a half. Which is kind of interesting because it's also quite a bit of congestion from prior to the FOMC, both resistance yesterday morning and had been the nominal support the market was holding back on Monday, after it had pushed up. So it's going to be interesting to see if it can get back above 21, 25, 26 today. That might put it back on a stronger tack, or if it weakens off below the 21.19 and a half that it hit earlier yesterday, and is against, of course, that old all-time high from back on April 27th. However, as we've been pointing out, even if it's below 19, the old high, it's going to have to break back below 21.12 to 15 to really look convincingly back in the old range through the various points of congestion near the high end of that range before it pushed up late last week. And lo and behold, where is the somewhat aggressive upward channel? Not this very aggressive one that was mucked with yesterday, but the somewhat broader aggressive channel that the market's in, and it comes up to the 13, 14 area early today. By late today, it's up to 21.17. So if this market can get back below 21.15 to 12, it'll be on a bit more convincing downward breakout. And that pretty much does it for the short-term view of the S&P 500.